G'day, Jared Mann here from Investor's Edge, bringing you my April Perth property update. Got a lot of juicy things to give you insights on, and I'm going to take you through the sale market, opportunities in this market, and an update on the rental market, so stay with us. So the sale market, we've had a fair bit change since I came to you in February, and we're back up to 9,500 odd properties for sale, and that's on par with our maximum level that we had back in November, December last year. So I'm just really keeping an eye on that at the moment because we were trending back down to a tighter market, and now we're back up at our maximum levels. Still in a seller's market, nothing to worry about, but very notable. And the reason that I think that's happening, I've looked deeper, and it's not just houses or units or land, they're all increasing uniformly across the board. So not just one property type. And the reason I believe underlying that is that as turnover and our growth is rippling outwards into the 15 to 40 kilometre radius of Perth, there's a lot of pent-up demand there from people that couldn't sell, couldn't get their prices, or saw neighbours not sell or not get their price and then decided not to sell themselves. So it's natural that as we've got demand and more houses selling in those outer regions, the people that did want to sell in all of the years past are now seeing others in the street get sold and deciding to come on too. So we've got that's bringing a lot more properties on the market, and it's probably going to take a bit of time to stabilise. Now, the reason I know that it's extra properties coming to the market is when we look down here at the number sold, we're still at our record high levels that we experienced in 2013. So our number of sales hasn't dropped, that's ticking along. We're at 970,000 sales in the last two reporting periods. So it's really just extra properties coming on, and those sellers that have been waiting for a while are now coming on to take advantage of that. And where that's leaving opportunities in this market, well, if I was looking to do a house and land package and build, there's good buying opportunities in the outer estates, the ones that have got infrastructure changes happening too. My favourite of the outer estates is up in Butler at Eden Beach, a coastal suburb there, and Butler's getting a new train station opening over the next 6 to 9 months. They've got a new Woolworths and a few other commercial things going in, and I much favoured that over Harrisdale and Baldivis. I'd look at those too, but I'm preferring Butler at the moment. If I was looking to do a development site, I've been out active in the market looking to buy a development site over the last month myself. Had 4 offers in on properties and missed out on the first 3 and picked up the 4th. And I purchased in Thornley, which is just on the 15 kilometre radius border, and there was still some good value buying in there. If looking to do a development for your retain and subdivides, don't settle for anything less than a 15% total return. For your development sites, if you're looking to do a smaller apartment group, don't settle for anything less than 25% total return on investment. They're the kind of numbers that are possible out there. To improve that return, look for areas that are getting rezoned or density bonus changes. The city of Gosnells has got an interesting corner lot R30 density bonus going through for areas within 800 metres of suburb town centres, so take a look at that one, and that's where I'd start if I was looking to do a development strategy. So when I come across to the rental market side, a little bit worrying is the vacancy rate in our stats. Well, it's really just coming to reflect what we've known for the last 3 or 4 months. The vacancy rate's now up at 3.8, which is a fair increase on our levels that we used to be at the start of last year. We started last year at 1.92%, and we've almost doubled that, and we're seeing that it is taking a good 2 to 3 weeks to find a quality tenant on properties. So make sure you give yourself that lead time. I'm watching this to see if we stabilise or if the rental vacancy rate keeps shooting through. Now, suburbs are very different and case by case. The Perth CBD, East Perth, West Perth, they're property market is heading back to a neutral market and pulling back in prices, and the rental market is also pulling back. The CBD area has been in the inner yellow, has been really affected by the slowdown in the mining boom. So in there, you can imagine the vacancy rate would be a lot higher. We're seeing $50 to $100 per week adjustments on a typical property at $500 per week, pulling back around $50 on average. And the upper end executive market's pulling back hundreds of dollars per week, and furnished rentals are not as much in demand because people aren't bringing their executives in and putting them up on a shorter term basis anymore as much as they used to. The number for rent has started to plateau at around 5,000 properties, so I expect the vacancy rate to stabilise as well. I'll be keeping a good close eye on that and over the next months, and our median rent has stabilised to at the $460 per week, which is a lot more sustainable and good news for tenants. We've actually had our record number of break leases this month. It's been keeping my leasing department really busy, and the main reason that tenants are reporting for their breaking lease is purchasing and buying in the market themselves. So as the outer suburbs become more popular to purchase in, that's where the affordable spots are for them, and we've got a lot of break leases getting out of the rental and into the sale market, into the property ownership side. So that's my overall update. Feel free to send me through any questions or give us a buzz for a chat in your specific situation. I've really loved bringing this to you, and I'll catch you next time.